Testing 1 2 1 2. What's cracking, folks? I'm Craig Savage. Welcome to my channel. All right, so getting things situated here. It seems that we are on time. Again, welcome. It is Sunday afternoon. Here 12 afternoon in California time, and I just want to say what's up to the folks that are tuning in. So here we go. Cannon on Hill is here. Beach Boy is here. What up, Beach Boy? How you doing? Here we go, man. Just another day, on Sunday, getting ready for another trading week. Pretty exciting week. What just happened, Tom Kaufman, what's up, brother? How you doing? Thank you for tuning in. And I see it's not many people that are tuning in today, but that's okay. We are option riders, and sadly, option riders, we don't get a lot of love, and we don't get the 1 million, viewers, 500,000 viewers. We get the 20, 30, 40, maybe 50 viewers, right? But we're the ones that make money. So I'm going to have to say that I like it that way. It's not too many of us that are into this life, right? But the ones that are here, we're the ones that reap off the benefits. And so it is what it is. Let's see here. Steve, what up, Steve? What's going on? So we got Beach Boy Steve, Tom Kaufman. What's up, folks, man? Very good to see you guys. Figured that I start off by saying that I have the avocado here. I don't know if Hockey Rink is watching, but I did tell him that if he put the SOXL and I forgot what other stock in the Bevelizer that we all follow in the Discord, I was going to. He said I'll do it if you have an avocado with you next time you do a live. And so, true to my word, here's an avocado. I said I was going to have an avocado, and we have an avocado. So there it is. So somebody copied me on the last week of those Neo 4's June puts. Good. I was able to get 40 cents for those cash secure puts in June. So worst case scenario, I get I think I did 20 puts or 30 puts, something like that. Worst case scenario, I get put Neo to buy it at 360. I believe the 52-week low is 362 or 372, something like that. And so I will be getting it below the 52-week low, and I'm getting paid for that, which is beautiful. And that's what we want to do, right? So I literally got paid, I think, like $800 or like $1,000 to buy Neo at 360, right? That's insane. And that's what we do here on my channel, right? This is what we do as option riders. Some people get it. Some people don't get it, and it's a little confusing, but it's something that you have to keep doing, right? Nobody goes into a boxing match right off the gate, right? You say, hey, I want to try this boxing situation here and give it a try and see if I become a world champion. And then, in a month, you're like, I'm ready. Let's go and fight the world champ. It just doesn't work that way. It takes time. It takes dedication. And more than anything, it takes capital, right? So it takes a strong stomach, and you have to be able to look ahead and have a goal, not be intimidated by underlying factors such as market variations, albeit on the upside or on the downside, because we make money either way. So like my boy Bertie, Alberto, I don't know if you're here, but if somebody could put this on the Discord, that would be cool. Put it on the general and on the us, for those that are in the know, and maybe people wanna say what's up and kind of get a conversation going, and then let us see where we're at, right? Where our mindset is at. But again, um, option writing is not for those that are faint of heart. However, if you are able to weather a storm or two, and you get to see exactly how you're able to make money, whether the market goes up and down, you're now part of a very small club. People that own stock, less than 1% write cash secure puts in covered calls, and that's us. This is why we make $1,000 a week. Some people make 20,000 a month. Some people make $500. It doesn't matter. It's not. It's not the amount of cash that you got to look at. It's the opportunity, right? The opportunity is there for you to make more money and have income based on the assets that you're holding, right? And that's the name of the game, is so that your stock is not just chilling, doing nothing except either going down or up. You're actually being proactive and saying, I have 100 shares of NVIDIA, and it was 160 a couple of weeks ago, and it's now 120. I lost $4,000, but what do I have to show for, right? And so by you selling covered calls or doing cash secure puts, you're able to now take money, right? And are able to make it tangible. You can then use that money to buy additional assets, i.e., more shares, or you can buy another stock. You can take out that cash, and you'll be able to then pay bills. You can actually pay some credit card bills. You can pay your mortgage, your rent. You can pay your car note. How cool would it be for someone that's holding 100 or 200 shares of NVIDIA to pay their car note with NVIDIA covered calls? So NVIDIA is going up, $20, down $20. It's one of those things that, if you're not going to sell and you're a long time holder, you really don't care whether it goes up or down short term. But what are you doing with it in the meanwhile, right? How are you getting paid for holding? And that's what we are doing. We're getting paid to hold the stocks that we've bought. And so I don't know if you guys caught it during Monday or Tuesday, one of those days. Uncle Bruce was on. For those of you that don't know, Uncle Bruce is a YouTuber that I follow. And so he was mentioning something. And then I mentioned, oh, by the way, I got a bill for my daughter breaking her arm in November, right? And after all the insurance that kicked in and the deductible, the numbers were crunched. I like to wait 2 or 3 months for my insurance to do everything that they got to do, and for the bills to come in and finalize, right? And then I get like one final bill where they're giving me a warning and say, if you don't pay in 60 days, you're gonna get put on collections. I don't fear those. Those are usually kind of like the most accurate and final numbers, right? And so what I do is I look at it, and it was like, I think $1,300 or something like that this time around, or $1,200, and I have some stock that I was able to sell some cash secure puts on. Actually, no, I don't even have stock. Sorry, I'm lying to you here. I actually did cash secure puts. I was able to do cash secure puts on SMCI, which is a company that I like and I want to buy, and I believe Unity. It's another of the companies that went down on I believe Tuesday. Could have been Tuesday. And so I was able to make $1,300 on cash secure put money. So it's basically a premium for me saying I'm going to buy these companies in the future in June for like 15% less of the low of that day. Meaning, I think that SMCI was at $37. I basically told the overall market I'm willing to buy SMCI at 40 at $35, which is even two. So it would be like $2 cheaper than the 37 it was at. So basically, I'm saying I'm gonna buy it for 5% cheaper. Give me $5. I asked for $5, so that's $500, right? Because it's 100 shares. Someone gave me $500 to buy SMCI at 35 in June. So basically, I'm realistically buying it for $30. And then in June, if SMCI is at $29.50 or $29, doesn't matter. I get those shares, and great. I made $500, and I bought a stock that I want for a lot cheaper than the low of that day, which is insane. I think it's $5 off of 35 is easily like what 15%. So add the 2%. So I'm buying that stock for 17% less than what it was on that day, and I'm able to show something for it, right? So then when the stocks drop, if they do, because right now I think we're in a quite bearish market, then guess what happens? I'm already feeling good because I was able to take money off the table. And that's exactly what we're trying to do in my channel, right? I'm trying to teach you guys so that you can make money using assets that you already own, right? If you're going to play in the stock market, you got to make money. And if you guys know me, I am very of the thought of bulls make money, right? Because somebody that's bullish in the market is always looking at the upside and very fairly positive, and they're like, we're going to make money. Bulls make money, right? Because we're going to have a bullish market at some point. Bears make money because bears are the ones that are like me, pessimistic about the market and the underlying overall structure of how things are just like allocated. And then you do the macroeconomics, microeconomics, and we're able to see data and then just be able to interpret it and say, I don't think things are as cute as you think they are. So I'll be a little more pessimistic, but I'm gonna do cash secure puts. Bears make money, I assure you. But guess what? Pigs get slaughtered. And that's exactly what we're trying to get away from, right? We're trying to make sure that we don't get into a situation where we're overly greedy and end up losing our shirts. And that's basically what ends up happening a lot of the time when people have no structure and no goals as to how they trade. Anyways, thank you for watching me, right? Credit Savage of Wall Street, baby. I see another lurkers here. God damn it, what's up, lurker? Yeah, the wrench is in the house, baby. Alberto Savage, I'm losing my patty. Bro, I am not surprised. I you know what? Those panties were lost a long time ago, bro. Hey, so if you guys see a hockey rink somewhere and you guys let him know I have the avocado that he asked for. Here it is, man. Here it is. So I'm a man of my word. Okay, so all right, enough of the shenanigans and me trying to explain what this channel is about and what I hope people take out of it. We're here to make money, right? We're also here to kind of have a good feel of what's gonna happen tomorrow. After all, that's what we want to know, right? And guess what? Nobody knows what's gonna happen in the market tomorrow, man. We can look at pre-data, right? We could look at the pre-markets, and we could look at what the Asian markets are doing. But at the end of the day, once 6:30 a.m. West Coast time comes about, which is 9:30 a.m. East Coast in New York, once that bell goes off, we're off to the races. It doesn't matter what we think. It is what it is. It's gonna be what it's gonna be, right? So here we are. Is it gonna be one of those days that's gonna be a early Christmas and we're gonna get paid and Santa's gonna be about? People are gonna be happy. We're gonna have an overall green market and people are gonna get paid and they're gonna be able to try to catch the market and time the market and look at trend lines and make a killing. And are we gonna have Christmas in March, or boom, are we gonna have one of those days where somebody like this T-Rex is gonna take a bite out of someone's ass and make that market go down, baby. So it's my little T-Rex right here. I figured I'd start bringing props because my son thought it would be a good idea. You know what? I said, son, absolutely, I'm gonna do this. I'm gonna show him this video later so he so he can see that I do value his thoughts, right, and his ideas. Here it is. So are we gonna have a T-Rex day, right, with a little T-Rex arms, and are we gonna have a Christmas in March? Let's find out. What do we know, right? What do we know? We know that $5.5 trillion have evaporated from the market, right? And how do we know that? Well, NVDA has lost over $1 trillion by themselves. Elon Musk has lost, I think, over $1 billion himself. So that's $2 trillion right there. More, right? Here we go. Lurker, sub and like. Yeah, thank you, brother. Kent's mom. Hey, Kent's mom, how you doing? Making that dinero. Keep on writing. That's what we do, Birdie. So, speaking of Tesla, I saw what happened to you, Birdie. Very unfortunate, man. Look, we may all have our political views, right? And some people may like this candidate or the president. They may not like the president or the owner of a company, right? But at the end of the day, we don't want to vandalize people's property, man. I'm one of those people that I'm very liberal minded, but I'm also conservative in a lot of ways, right? So I don't think that our executive branch is handling business the way they're supposed to handle business and staying out of the markets, right? And I don't agree with most of the stuff that they're doing, but I also don't agree with people setting fires to cars because somebody bought a brand and because they bought a brand for a specific reason. They like the car and somebody else doesn't like it, so they're gonna throw Molotov cocktails and risk those cars exploding. I think that's terrible, and it doesn't send a good message. Look, elections have consequences, right? And it already happened. Your time for your opinion to get taken into account has gone, right? At least voting, when it comes to voting, right? And you in the same realm of what happened in January 6th, right? It was just unnecessary. The election happened. People spoke. And whether you like it or not, we have to move forward, right? So totally unacceptable. I don't like it. And I'm sorry that happened to you, Bertie. But you know what? You made the best of it. And you're able to get 4 brand new tires. And I think that's pretty great. Who we got? We got Javier. Hello, fam. I have a feeling next week will be a good week. Deep, relaxed tunes. Hey. You know what, Javier? It doesn't matter, man. That's the whole point, right? Like, we are option riders. Whatever we decide to do is what we do. We have a mindset, right? And you should have a plan. So, for example, I've already deployed half of the cash on hand that I had the past weekend. I've deployed that cash, I think, during Tuesday or Wednesday when the market tanked, right? We had some bad news, and it was, I think, the day before Jerome Powell spoke. I think it was Tuesday. And I was able to get in at some very low pricings for some companies that I'm looking at, right? So I think I was able to buy Neo at 40 cents for June cash secure puts. I was able to buy Unity $20 cash secure puts for over, I think, $250 or $225, something like that, or around $250. I was able to buy C3Ai $20 cash secure puts for June at $275. I was sell. Sorry, I'm talking selling cash secure puts, not buying. I apologize. So I was able to deploy a ton of cash, and I was able to, I think I did, after the math was done, I think I brought in 17.3% of the overall. So I did cash secure puts for 2020. I'm sorry, 2026. And I was able to do cash secure puts as early as May. I think I went May, June, and I may have. I think I went to 2026 and even March 2026. But I was able to bring in a lot of cash, and so that cash, I was then able to buy more shares with. I bought, I think, more Lucid. I bought some PIII, and so it's like a penny stock at this point. I don't recommend anyone getting into it. It's just my own personal what if. It's like a lottery ticket. You guys know that lottery, it never pans out, right? But I did that with Ocugen. I think like 6-7 years ago, when Ocugen was like at 17 cents a share or something ridiculously low, and I was able to get like 6,000 shares, and then it jumped to $18. So it does happen, but it seldomly happens, right? Like, it happens, but it doesn't happen all the time with every company. It's one of those. But anyway, so I was able to do more cash secure puts, and I was able to take out money to pay for my daughter's hospital bills. And you know, I told my wife, I was like, man, it sucks that I have to pay this much, but it does soften the blow to know that I am getting something out of it, which is I'm actually using a credit card that's going to give me a sign up bonus after spending a specific amount of dollars on it, and two, I'm using cash secure put money and I'm gonna get something for it to the tune of like some nights at the Waldorf Astoria, right? And so that makes the blow a lot less. And I think that that's kind of how I would want people that are watching me right now. I would want you guys to approach selling cash secure puts and doing covered calls and just option writing in general. I'd like you to approach it like that. You know, it's an opportunity for you to alleviate financial stress, and that's pretty much the point of you getting paid to hold your positions, right? So, like I said, I'm kind of all over the place here, but it's just because I end up, saying what's up to you guys, and I can see how Uncle Bruce gets all like, out of there sometimes. But all right, $5.5 trillion have shifted, right? But where has that money gone? And what is Monday looking like, right? So we have two types of investments. Doing my research, right? That I see the way that things have shifted. I think that there's two types of investment firms that have taken different positions and have shifted, right? And I'll explain a little more. But before I explain, let's just backtrack and in the overall grand scheme of things, we are retail investors, right? And I think we make up like around 4 to 5% of the overall market. The real money is with investment firms, right? Firms like BlackRock, JP Morgan Stanley, Fidelity. You have Vanguard, right? These companies have hedge funds that they've created so that then they can invest, right? And they can move money as they see fit. Well, I truly believe that the sectors that have bled out and moved most of that money have been the equity quant hedge funds and the equity TMT sector hedge funds, right? And we're talking trillions of dollars that they've moved around. And you ask, what are those funds? Well, let me tell you. The equity quant hedge fund is the funds that use um, data, metadata, economic data of the overall market, and they use code so that they can predict and make financial decisions, right? These are multi-trillion dollar companies that use their resources, and sometimes it's in the billions of dollars, to make the best decisions that they can, the decisions that are going to bring in the most money, right? Um, and then there's the TMT sector hedge funds, which invest in firms that are related to tech, media, and telecommunications. Okay, um, Google, YouTube, right? We're talking about MSNBC, the app. We're talking about CNN and Fox, the app, right? And the channels. I mean, this is a lot of money we're talking about. Well, we were just at 52-week highs, and then we had a change of administration that seems to be very bearish um, on a lot of these telecom companies, right? A lot of these media companies don't like what's happening right now, and so they are then going to be shorted, right? There's more of a bearish sentiment when it comes to those. And so what do these hedge funds do? They take their money out. They take their money out, and then they pivot, right? They basically they deploy that money uh, in the best way they can. A lot of them go into bonds, right? They're going to into the 2 year, the 10 year treasury yields, and different hedge funds that they've created so that they can get the most out of their money. They know they won't be able to generate 10, 20, 25% back anymore in those companies. So what do? They're going to get the for sure, 5, 6%. And then while they time or they wait out whatever is going to happen, they're able to get some returns, albeit smaller returns, on all that money, right? And so you have financial institutions like Bank of America, Morgan Stanley, J.P. Morgan. All these guys have so many resources, and they have some of the smartest people alive, right? Crunching these numbers, and these people are studying the market, trying to see what's going to happen, right? And here's what Morgan Stanley is saying, right? Their best and brightest, that the consumer confidence is in decline. All right, Captain Obvious over here. Domestic product calculations are showing this. Yes, I think we know that. So this is the best and the brightest, right? What is Morgan Stanley saying? I mean, Bank of America, sorry. They see more pain. They see more downwards pressure, and they think that they're a little more bearish in their sentiment as to what the overall market in futures are, right? JP Morgan is saying, JP Morgan, Jamie Dimon's baby, they're saying that right now is a good opportunity to enter, right? Right now you got to take calculated risks, and based on what your overall goal is, you could take some risks right now, right? It's a good time to enter the market. What is Morgan Stanley saying? Well, after telling us the confidence is in decline and domestic product calculations are showing this, they're actually saying that the worst is behind us. So again, who are we to believe, right? Who are we to believe? It's so hard to try to make up your mind based on what the experts are saying. That's what the experts are saying. People that are getting paid billions of dollars to give you advice. If you were the type of person that has all of your money in those hedge funds that these guys have created, you're kind of at the mercy of whatever it is that they think, right? and they're charging you a fee. They're charging you a fee. No matter whether you make money or not, they are charging you a fee to tell you this. Something that another company that's also worth billions of dollars is telling you is completely wrong. Who are we to believe, right? And this is why we're here. This is what we're trying to look into and make the best decision that we can make. And this is why I am a big proponent of you taking your own finances under your wing, right? Don't pay somebody else to manage your portfolio, man. You can take your portfolio with you if you have it on a 401k. Not financial advice, by all means. But this is just something that it kind of triggers me, you know. It's just, I don't see how someone could be okay taking money from you and your 401k, right? If they're managing your 401k and you're losing money. I just don't see how they can look at themselves in the mirror and say, I'm going to take $1,000 from that guy's $10,000 or $100,000. I'm going to take 1%. Even though he's already lost $50,000 this year, I'm going to take another 1,000 because I'm managing his portfolio that he's lost $50,000 in. I don't know how they can do that. But that's exactly why I decided, you know what? Fuck it. I'm going to take my own portfolio under my wing, and I'm the one that's going to be now in charge of my future and of my finances, and I've done well, you know, especially the last 2 years, because I was able to just say, you know what, I'm not going to care about what these so-called experts are saying. First and foremost, because they have an agenda, right? The agenda that they have is to make more money for their companies. You know, the agenda that I have is to make more money for me. And so who better to look after my best interest than myself? My wife's interest and my family's interest, my kids, than myself, right? And that's exactly what why it doesn't matter what the market does tomorrow. You know, look at what's happened, right? We had a couple of dead cat bounces last week, and if you're able to see the video from last week that I made, I remember saying I see a dead cat bounce or two happening. And what did I say? I said, if there's a dead cat bounce, sell some covered calls. And that's exactly what I did. I believe on Monday and I think on Wednesday, I deployed some covered calls. You know, I sold some Rivian $12 covered calls for June, and I brought in like $1 and change per contract, right? So that's $100 per contract or more. Same thing with Archer Aviation, right? Another of the companies that I hold, I was able to deploy some covered calls for I think June and brought in more money. C3Ai, same thing. I was able to sell $25 covered calls, I think, for January. And same thing with SoFi, right? SoFi had a nice little uptick, but it started the week, I think, in a 1080 or like 11 something. That was a beautiful time to go in and with some cash secure puts. I think that last week I said some $10 cash secure puts would be great for January. Some 11s would be great, because if you are of the thought that SoFi is going to go up, cash secure puts are going to make you money. You know, it's a good entry point. Anywhere in the $10 range for SoFi, I personally think it's a good entry point, right? So if you're somebody that's long on SoFi and you believe that they're going to have a future when it comes to finance and digital banking, I think it'd be a safe bet. You know, again, it's my personal opinion. That's one of the fucking luxuries of having my own channel is people that are kind of like of my same mindset. They're watching me, and I know a lot of people that are trading SoFi right now, and they feel the same way. We've been trading SoFi since it was $4 or $5, you know, and we took a big position, and now we're reaping off some rewards. And D- Don't mind me while I get paid while it keeps going up. All right, what do we got here? Tommy Jan. Hey, what's up, brother? Brent, Sunday afternoon. It is, brother, Sunday afternoon. Parker Ivy. Oh, snap. What up? What up, brother? How you doing? Let's see, Tommy Jan. Digging though on my mail looking for tax documents. We're listening. Already finding this is year will hurt. So though my stocks last year to catch up your puts, now I gotta pay taxes on them. Well, that's a good problem to have, Tommy. For sure. Touch grass. What's up, fam? What up? How you doing? All right, so Tommy, man, I think that's a great problem to have. Anytime that you have tax problems, I think that's a win. I literally was just talking about how, I ended up taking a very good approach to paying taxes because I'm going to get some money returned from not taxes, obviously, but from me paying taxes. I'm going to use a credit card that's going to give me a lot of points, and those points I'm going to move over to Hilton. Hilton has the Waldorf Astoria hotels under their portfolio, and I'll take some nice vacations, and I'm going to go to stay at the Waldorf Astoria. Anybody that stays at the Waldorf Astoria, I think the low season, it's $600 or $500 a day, and the high season is like $1,500, $1,200 a day to stay there. So it's a win-win for me. I pay taxes. I get points after meeting a specific a threshold, a payment threshold on credit cards. It's like a promo. You spend like $4,000 or $5,000 in 3 months or 6 months, and then they give you like hundreds of thousands of points, and those points you could use, as you see fit, right? So like I like American Express because they have a lot of airlines and a lot of hotels in their portfolio, and I'm able to just stay there for free, and I basically get something out of paying taxes. So let's see here. Tommy, may you pay so much taxes that you scream. Beach Boy. Beach Boy has tax problems. I can guarantee you that, man. So yeah, man. What do I see happening tomorrow? It just what has changed, right? As far as the markets tomorrow, what has changed? Have we had like some epiphany? Like, I mean, has the war in Ukraine between Ukraine and Russia stopped? The issues with Israel and the Gaza, are they done? I just look at the overall structure of the economics right now, right? Like I think Nebraska is in a pitfall right now, right? They're losing billions and billions of dollars because they decided to take an approach where they said we're not going to hire any illegal aliens, and we're going to deport them. And then I think a lot of the farm hands and a lot of the people that were in cattle ranches decided we're leaving, right? And these were like people that may have not been illegal, but they just didn't want to be somewhere where they're going to be bastardized for looking a specific way. And they decided to come to California, Oregon, or Washington, right? And now Nebraska is undergoing some really major pains because they decided to take a very tough stance on immigration, right? And now I think 50% of their revenue is gone. They've lost 50% of the workforce, right? And it's pretty sad. I think that I think Wyoming, actually, I was reading a report, and it seems Wyoming is now coming to terms that they actually are going to have some major deficits because, again, a lot of people decided to leave the state because of the anti-immigrant sentiment, and instead of seeing immigrants as a cash cow that they are, as good labor, as growing growth to your economy, and adding to restaurants and to the nightlife, people buying at grocery stores or whatever items, and just going to the malls and having their cash move the economy. They decided that they don't want that, and so that cash left. That cash is now coming to California and Oregon and Washington, in Colorado, and I can guarantee you that California's economy is going to thrive. And this is not me being political. This is just numbers, right? Like, this is just a fact. The California has the fourth strongest economy in the fucking world. It's not a fucking opinion, this is a fact. We have the fourth strongest economy in the world because we welcome immigrants from India, from Asia, from Latin America, from England, from fucking Spain, from Czechoslovakia, from Russia. We just welcome everybody, and we're able to say, you know what, you may be coming from a different culture, and we respect that. Please add to our economy. Come and work as hard as you can so that you can pay taxes and we can have better roads. Now, I'm not saying that our cities, some of the cities don't have problems. I think every major city has a problem, right? But if you look in the grand scheme overall, right, having more people means you're having a stronger economy, and then that money is then used locally, so then you're able to generate more taxes, and you're able to have better hospitals, you're able to have better roads, you're able to have better schools. Not to say that we don't have problems, right? I mean, just like in any part of the world, whether it be, in California or Japan or China, there's always going to be some type of issues, right? But your economy is not going to bleed out because of your anti-immigrant stance. And that's exactly where I'm going to with this, right? Now, those problems are still here, right? I mean, I think that the economy is starting to show weakness. I think new vehicle sales and even used vehicle sales are down, and that's like, you can take the pulse of the economy by looking at that, right? I think consumer confidence, is in decline for sure. I see it personally when I go to the mall, right? And when I go out to restaurants with my kids and my wife, and we see that there's not as many people out, walking around and spending cash because they're staying home, and, grocery prices are a lot more expensive. So they decide, instead of spending so much more money in restaurants, we're just going to eat at home because we're paying so much fucking money for groceries. We might as well, eat at home. That's just the bottom line. And so I think that the bear in me is telling me that the economy is in a downturn, and I am going to capitalize on that, right? So, and this is not to say that a lot of companies are not going to make money, right? I think that a lot of companies like NVDA are still going to make money. I don't think Tesla is going to be making a lot of money, but I think that, Genentech is still going to make a lot of money. I think that Novo Nordisk is still going to make a lot of money. I think SoFi is going to make a lot of money. Look. You don't have to believe me. If you're in the United States, just look at the overall trend when it comes to banks, just legacy banks in general, right? Are banks closing? Are bank branches closing in your area? And the answer was probably yes. I know in my area, there's a Bank of America has closed a lot of branches. Wells Fargo has closed a lot of branches. Chase is closing branches. What does that mean? That means that the overall economy is not doing as great because people are getting laid off, right? Now, you may be able to say, well, the unemployment is a 4.2, 4.3, 4.4. Okay, but you got to take into account that a lot of people have been unemployed for now over a year. They don't count those people because they've run out of I think that their money, their EDD limit has been reached, and they will not be able to get any more EDD money because they haven't put into it, right? And so that's just a number that goes down. So now, although that person is unemployed, they won't take that person into account because technically they run out of unemployment money, so they're not able to say I'm unemployed because they can't send that paperwork anymore because they've already exhausted their limit. So how many of those people are there out there? I'm willing to say probably in the millions. We have a couple of million out there, people we're not accounting for. And so domestic products are more expensive. People are getting laid off. Banks are closing branches. Restaurants are also closing, right? And these are not good signs. So what does that tell me, right? That tells me that it's okay to have cash on the sidelines. I think there's weakness in the market. I think we're going to revisit, the 39,000, 38,000 point mark in the Dow. I think the Nasdaq is probably going to come down to like 14,000 again. We're going to have to revisit these numbers and then see if we're able to then hit these lows and then go back up, or are we going to hit lower lows after that, right? We've been hitting 52-week highs for a long time. Now it's time for the lows. I mean, markets go up and down, right? And so what do we do as option riders, though? We sell covered calls. So don't be afraid to take some SoFi, that's in your portfolio and say, hey, I want to sell 5, $13 covered calls or $14 covered calls for June and bring in $1, and you'll be able to make some money and bring in some income, right? Same thing with NVDA and Tesla. If you're holding Tesla and you're like, you think it's going to go to 300, I honestly think we're going to see 200 or 190 before you see 250. So does that mean don't trade it? No, it just means it wouldn't be the most terrible idea to say I'm going to sell Tesla $275 covered calls for January, right? And bring in some cash, bring $1,000, $2,000. I don't know what they're trading at, right? But that's for you to find out. Look at your options chain and make a decision, right? I always tell people, make a decision, either on this way or that way, but you got to make a decision. And that's what helps an option rider, is having options. You see what I did there? That's right. So create options for yourself. I like to jot down Sunday nights or very early mornings on Monday where the stock is at, right, that I'm holding. And I write, 2 strikes. I write one that's directly above where the overall is, and one under, right? And then I'm able to then look ahead a couple of months, and I look at volume, right? And I look at the volume of these strikes, and then I'm able to see how easy it is for me to go in and out based on the open interest of this specific stock. And I then deploy my covered calls. If the stock sees a little uptick of 5% or more, that's my cue. And I sell some covered calls. And if the stock goes down 10% or more, that's my cue. I deploy cash secure puts. And I do that for both, for stocks that I'm thinking about buying and stock that I have, because you have to have a plan. If we have a day where, everything is hunky-dory and everything is green in the market, we get some good news, whatever, I have a plan. If numbnuts opens his fucking orange mouth and spews fucking fecal matter, right, and tanks the fucking markets like he does, I have a plan. And then I'm able to deploy, my cash and make income, right? And so that's just, what I think we should be doing, right? Rivian. All right, let's start with the Savage 10, baby. Rivian is I told you guys to sell some cash covered calls, some cash secure puts. I did both. Rivian is actually up, I think 6% as of Friday, right? That's great. I sold $12 covered calls. I was able to take in some nice chunk of change, and I can't wait for it to go to 13 or 14. Never fear the upside, right? Just like you should never fear the downside. We get paid either way. So what do I think about Rivian? I like Rivian, right? Are they losing money right now? Yeah, they're losing money. I think every single electric vehicle company is losing money, but that's just because people aren't buying electric vehicles. At least they weren't. But now that people have started to sell their Teslas, they're looking to pivot. And guess who's going to be in a better position than most to take those customers. Rivian. All right. NVDA. I told you guys, hey, sell some cover calls on Rivian. I'm sorry, on NVIDIA, because I see a little weakness. I see us going to $90 in the summer, right? Does that mean be afraid and all hell's breaking loose and run for the hills? Absolutely not. It just means that I see weakness. Could I be wrong? Of course. But if it does go to 90, right? Wouldn't you like to take a position at 90? It was just a 160, which means it does go to 160. I think it's going to go back to $3 trillion. NVIDIA is, but again, the overall market is bullish, right? So all that money that left, is gone. It's now time to take a better position. So if you've been holding NVIDIA, and you're in the 140s, 150s, don't be afraid to sell some 140s for January or for March and bring in some cash if we have, a 5% upswing, and take in some cash, man. Don't be afraid that if you see it go to like 105 or 100, don't be afraid to sell some cash secure puts, some 90s, some 95s for March, and bring in some cash, bring in 10, 15 bucks. I don't know. You got to look at the option chain and see what it gives you, right? Tesla, same thing. Tesla was up 5% during Friday, but I just don't see it go to 300 anytime soon. I think we're going to have some bearish momentum, and I think we're going to hit 225, maybe lower. But again, not financial advice, but if I was holding Tesla, I would be okay selling some 250s right now. Right now is 250. I would sell some 250s for January. Bring in some cash and laugh all the way to the bank. If you get taken out of 250, great. You'll have $25,000 that they're going to hand you. And then in January, you're going to have tax problems. Not the worst thing. Not the worst thing. And you can make a decision in January. You can say, hey, maybe I don't want to sell it at 250. Maybe I want to sell it at 275. Let's go to June. And then you roll from 250s to 275s. In the meanwhile, what just happened? All that data decayed, right? All that data decayed and you made money. What is wrong with that? Absolutely nothing. If you see Tesla go to 225, 200, not the worst thing to sell 190 cash secure puts out to March, June next year. Bring in a lot of cash, hold it, and use it to pay down credit card debt. Use it to buy some shoes. Use it to pay for your electric bill, your internet. Buy that new phone you've been eyeing. Buy that new laptop that you've been thinking about buying for the last 5 years, because your laptop is like mine and it's like an old piece of shit. Yeah, go ahead. And so anyways, it's just a matter of what you want to do, right? This is why you were able to take a stand in a position in the company that you believed in, whether it be, I don't know, Microsoft or you have, FedEx, Xerox, Nike, whatever floats your boat, Boeing. Get paid. The market is always telling you when to buy, but they never tell you when to sell. And the only time I hear fucking Jim Cramer say, sell, it's when something's down 50% already. It just makes no sense to me how you would listen to some talking head that is getting paid by these companies millions of dollars to tell you to sell. Because guess what billionaires do, man? Billionaires hold ridiculous amounts of cash so that when you sell, when you panic sell, they then will be able to pounce on the stock that you sold at the low and swoop it in for a lot less. And then they take some cheapies and then they write it up and make more money because they'll wait. They actually don't even have to sell cover calls. They really, have trillions of dollars, billions of dollars. They're able to just sit on their shares as long as they want, and then they just sell them whenever. You know, that's what the rich do, man. Um, all right. C3.ai. Well, it's no secret. Interest of full disclosure, my baby. I've been trading it for a couple of years now. It's up 1% on Friday, right? What's gonna happen with it? I honestly think it's the next Palantir, right? I was telling you people about Palantir last year when it was $15, and the year before when it was $8, $9. I was pounding the table. Palantir's a good buy. Buy it at 20. Sell cash secure puts at 22. Whatever. It's here. All you have to do is go look at my videos, man. I'm not. Look, it's not to say that I don't make bad calls. I do, but they're very few and far in between. I just want people to make money, man, because anybody that follows me is probably working class and probably has worked their way through from nothing, just like me, from nothing. And now you're able to have a bit set aside that you're able to invest, and you want to make a better future for yourself and for your significant others, your loved ones. And I think that's fucking cool, So thank you for watching, man. I appreciate you guys out there, giving me the thumbs up and watching, because we're just trying to make money at the end of the day, right? We're looking out for each other. So let's see here. What do RXRX, man. Recursion Pharmaceuticals, man. I like the stock, man. It is a hybrid between pharmaceuticals and AI, and that's the best way I can describe it. You're more than welcome to go into their company webpage and look at their whole structure, right? Look at their board, look at what they do, go over the prospectus and so on and so forth. And then you see if that's a company that you're willing to, dive into and see if you like it. But I personally like it. I've been trading it for like over a year, maybe 2 years, and I've made some money. I wrote it from, it was like $4-5 or so. I wrote it all the way to like 15, made some cool money, and then I wrote it back down. I have $7 that I deployed, $7 and $8 covered calls for 2026. I was able to take a couple of dollars, and so it's made me money, man. I think it's nice, a nice little cash cow, and I see it, making a lot of money in the future. Right now, I'm just using it for premiums, and it's wonderful. You guys may want to have a little look-see at it and see if it works for you. But it was up 3% on Friday. It's 668 right now. If I was holding it and I haven't written anything, if I had not written anything, I would look at writing $8 covered calls for January, March, and then bring in some dollars. Make your stock pay rent, right? Your portfolio is a building that you own. That's the way you got to look at things, right? And so if you're gonna have a building that's been inhabited by all these tenants, it's only fair, and it all makes sense that you charge rent. That's just the way that I see my portfolio. And so pay me money. That's just the way that I see it, and that's the way that you should see it too. Bring in some income, make it real by using it in your everyday life, man. And you'll see that whenever the stock takes a downturn or the overall market, you feel good. I feel good whenever I look at, my fridge downstairs full of food, or groceries, or I'm able to see my kids wearing certain clothes, and I'm like, I bought that with covered call money. The gamblers pay for that fridge down there, that TV, my microwave, able to see, a bed, whatever, different things at home, my phone, cover call money. I use premium to make it real. And then whenever and if the stock market takes a plunge, I feel good because I'm like, I was able to make money on the way down and made it real by paying for bills and for credit card debt, whatever, right? And the icing on the cake is when I redeem the points that I make when I use my credit card to pay for things that I'm paying off with cover call money or cash secure put money. So, it's one of those things, man, where, like I said, you guys are going to have to make a decision and then just say, what I feel comfortable with, right? You're going to have to ask yourself, what do I feel comfortable with? Do I want to take a chance and lose my shares by writing covered calls? Say, for example, you own SoFi and you write, $12, $13 covered calls for June, and you're able to bring $1.50 per share, right? June comes around or January, and then SoFi is at $20, right? And then you lose your shares. I mean, how do we know that's going to be $20 in June in January? We don't, But what you do know is that it was $12 or $13 right now, and you sold $14 covered calls or $15 covered calls, and you were able to take a premium and then make that money real, and then you're able to use it to pay your mortgage, pay your rent, whatever. So you made it real. And so you're selling your stock for more than what it's worth right now, and you received a premium. There's worse things, right? And so, but what if the stock is $11 or $10 in January? You just basically gave away all that time premium for nothing. And that's one of the worst things. I'd rather have regret to the upside than regret to the downside. And that's the way that maybe you should approach things. But anyhow, tomorrow, what do we do? It doesn't matter. Again, I am going to keep beating that drum. It doesn't matter what the market does tomorrow, right? You're going to sell covered calls if it's a green day, right? And if a stock pops up 5-10%, and you're going to sell cash secure puts if we bleed for whatever reasons, we go down 5-10% on some securities, right? You're going to go and sell some cash secure puts and bring in more money so that you can buy those companies at cheaper than they are then, right? So, and guess what? If the stock recovers in a week and then those cash secure puts, they lose 50%, you can buy them back for 50% less and get your money back. Boom. There's nothing to it, right? So, anyways, I gotta go, knuckleheads, because I'm going to go and enjoy my Sunday with my kids. I'm going to take them for ice cream. They have some tests that start tomorrow, so I promised them that I was going to go with them and take them for ice cream. It's a beautiful day here in Northern California. It's beautiful. It's sunny, and I don't want to spend more than an hour over here, kind of like just going over, these notes that I already talked about. So, avocado time, baby. That's right. No matter what happens, red or green, it's avocado time, and that's what you got. That's what you got to worry about. All right. So, thank you for watching, knuckleheads. I really appreciate you guys tuning in. Hopefully next Sunday I will be able to do it again. Same time at 12 noon here, California time. And we're going to talk about, what just happened this coming up week and how to approach the next day, next Monday, right? So, doesn't matter what the overall market does. We're here to make money. We're here to make money, and we're here to take no prisoners, right? We are here to say, when someone asks, what is your profession? You say, option writer, baby. Right? That's what you are. Portfolio manager. I assure you nobody's going to know what the hell that means, but you know. And you're making money. And at the end of the day, that's what matters. I'm the Credit Savage. Thank you for watching, you knuckleheads. I will see you guys next week, hopefully. And great seeing you guys. And wish you the best of luck on this next trading day. Let's see what the market gives us. You guys take care. And remember, cash is king, but credit is power, baby.